Starting January 1st, 2026, every taxable Nigeria will be required to obtain a taxpayer identification number as the federal government moves to tighten compliance and boost its revenue base. This is MarketSquare, your go-to show for deep insights into business and economic trends. I'm Olaitan Adebayo, and today we are breaking out some of the major developments shaping Nigeria's economy. Stay with us. The federal government has introduced a major shift in tax administration, with the announcement that tax identification numbers will become compulsory for all Nigerians involved in banking and allied services beginning January 1st, 2026. This move stems from the Nigerian Tax Administration Act 2025, recently signed into law by President Bola Tinubu. The law makes it mandatory for taxable individuals, businesses, and organizations to register with the relevant tax authority and obtain a taxable identification card. Ministries, departments, and agencies at all levels of government are also required to comply. Non-resident entities that provide taxable goods or services in Nigeria must secure a tax ID as well. Where individuals or businesses fail to apply, the law empowers tax authorities to issue one on their behalf or reject applications where information does not support approval. Any refusal may be communicated within 5 working days. Possession of a tax ID has now become a gateway to several critical services, from government contract to banking transactions, insurance, stock market participation, and other financial services. No individual or businesses will be able to operate formally without it. The Act also provides room for suspension or deregistration if a business ceases to operate. To give the policy structure, the Nigerian Revenue Service Establishment Act 2025 grants wide powers to the service's executive chairman, who will also chair its governing board. The board will have a representation from the key ministries, the central bank, customs, the corporate affairs commission, and other critical agencies. The chairman will also serve a 4-year renewable term, while funding for the service will come from a 4% deduction from collected revenues, excluding petroleum royalties. Now, to better understand the impact of this reform, I spoke with Musa Oladipupo, a finance manager at General Consultant, who shared insights on how compulsory tax IDs can improve Nigerians' tax compliance and revenue collection. Take a listen.
Yeah, thank you for having me. Right. So tax ID, it's a unique. I think we need to understand what taxpayer ID is first, right? So taxpayer ID is a unique identity number that each taxpayer is expected to have, just like having a bank account where you are being paid into. And I'm sure everybody's bank account seems to be different from one another. So that's what. So coming to tax now. So taxpayer ID is a unique payer ID that taxpayer has. Do you get that you usually use anytime you want to remit your tax due? So you need the taxpayer ID to be able to remit your tax due, right? So before now, what we used to have, right? Let's say 2 years ago, what some company does is that they use the company's payer ID and they pay all staff using just one payer ID. And the issue with that in the past is that at the point of filing returns, so we call there's some we do filing return on the following year of the previous year, right? So you file in return for the previous year. So you have to now individually meet those staff and get their details. That's if um they use the company's payer ID, right? But what especially Lagos State has been doing over the past few years is that they enable everyone to have his own payer ID. So whenever you want to pay we want to remit payee withheld at the end of the month, you use each staff payer ID to remit the withheld payees, right? So making it compulsory now, I think, is one of the way forward, right? Because not all withheld payee in the past have been remitted. Because if you don't have payer ID, then how do you intend to remit the withheld payee? That's as a company, right? So if the government makes it more compulsory now, so what happens is that it provides more revenue for the government, right? And also it provides more accountability for in terms for employer, because once you have the employees payer ID, you are is now, you are obliged to remit the withheld payee. And the good thing with having a payer ID is that, so once payment is made, you get alert immediately, right? Because you've used your credentials to register at the point of registration, unlike when the company usually use their own IDs to where and they pay for all staff. So you easily know when payment is remitted. So the good thing with PID now is that once it's remitted, you receive notifications, and you can also log on to it, just like the way we operate our bank account. That you can log on to know how much has been remitted. You can as well log on to your PID, right? To be able to assess and see what has been remitted on your behalf. Government is going. Lagos State government is already doing the good work on that. You get, for those that are compliance in Lagos to understand what I'm talking about. So it's going to improve the revenue of Nigeria at large, and also enable companies to be accountable,
Musa
because
explained that compulsory tax IDs represent a step forward in strengthening Nigerian tax system. And this means more revenue for the government, a greater accountability for employers. Because once an employee has a personal tax ID, companies are obliged to remit payee directly under the individual's record. But unlike the old practices where firms use a single company IDs for all staff, this new system ensures that once tax is remitted on your behalf, you get a direct notification from the tax authority showing that your payee has been paid. This creates a more accountability for employees, reduces the risk of unpaid or diverted deductions, and this also ensures employees can track their tax records in real time. Moving forward, Musa also shared his perspective on whether there could be a challenge in implementing this policy.
yeah. So there will not be. I don't foresee any challenges in implementing this, because it's something that you can do swiftly in terms of generating taxpayer ID. Do you get? And also need to understand that is it's one of the things that is needed to be able to effectively um, execute this new tax law around payees, right? So I don't see any challenges in this, because I'm sure everybody will be willing to create a taxpayer ID, because especially if you see the importance of it, right? Like I said earlier, people in Lagos are already used to this. Majority of organizations now have taxpayer ID for every staff, right? And also, I think with the processes that it requires in creating one doesn't take time. Within 3 to 5 minutes, you are done generating a taxpayer ID. So I don't foresee any challenges in implementing it or in then creating one, right? It's a straightforward thing for those that already had a taxpayer ID, especially those in Lagos State. So there won't be any challenges whatsoever in implementing this. Do you get? All needs to be done just to create awareness for people why this is important, and why have down taxpayer ID. Like I said earlier on, just like having a bank account. Do you get? Yeah.
In Musa's view, there shouldn't be a major hurdle with the implementation of this policy, since creating a tax ID is just a quick process that will take about 5 minutes. But what the government needs to do is just to build awareness, help people understand why it is important and why they should get one. But beyond compliance, the discussion turned into inclusion as Musa addressed how the government can ensure this reform does not exclude low income Nigerians from financial services.
So I don't think it's going to exclude low income earners from financial services, right? Like had earlier mentioned, the process it takes to register or activate your tax ID in the first place is very seamless, right? And for a low income earner that already had an account details, or let's say you want to open an account and it's not compulsory that you have tax ID. Do you understand? I think it's an improvement as far as I'm concerned. And this is because let us forget, one of the objective of this tax reform is actually to reduce tax burden on low income earners, right? So the objective has even sort of explained why it's important for the low income earners to also be part of this inclusion, right? So if it's make compulsory that everyone that wants to open an account needs to open also activate the taxpayer ID. It's just a way to say that we want to have tax data of everyone, right? However, the objective of the tax reform itself is not to put more tax burden on the low income earners. Well, one of those that will benefit from the tax reform come 2026 is actually the low income earners, right? So I think it's a welcome development, right? Everybody needs to have tax payer ID, right? And then, like I earlier mentioned, in the past, what we usually do in the past is, just sum up all these withheld payee, that's payee withheld by companies into the company's account. But with this now, everybody gets to know what has been withheld and what was paid into his account. So I think it's a welcome development. It's not going to take it's not going to remove the low income earners from financial services.
The enforcement of compulsory tax IDs is expected to widen Nigerians' tax net, improve compliance, and raise non-oil revenue for government spending. By linking the tax ID to banking and financial transactions, the government can better track taxable income and curb evasion. For citizens and businesses, the reform could bring about more transparency and accountability, but it also means stricter monitoring of financing activity. For the economy, a stronger tax administration builds a reliable revenue base that reduces overdependence on oil earnings. It also aligns Nigeria with global best practices where unique taxpayer identification is standard. Nigerians, however, may feel short-term pressures as compliance becomes a requirement for accessing basic financial services. But over time, if properly managed, the reform could strengthen government's capacity to fund infrastructure, social programs, and public services. And while Nigerians are still reacting to the mandatory taxpayer identification number development, another major policy is also stirring concerns in the energy sector. Nigeria's fiscal landscape is bracing for another shakeup as the federal government introduces a 5% surcharge on fossil fuel products, part of the new Nigerian Tax Administration Act, signed by President Bola Tinubu in June. The tax covers petroleum, diesel, and aviation fuel, while cleaner options like CNG, cooking gas, and renewable are exempted. The government says it will generate nearly 800 billion naira annually and fund road maintenance, renewable energy, and climate commitments. But on the street and among experts, reaction has been sharp. To better understand how this will play out, our reporter Lighton Babatunde has been speaking with experts on ordinary Nigerians.
Hello, Lighton. The government says the new 5% free surcharge will go into road maintenance and infrastructure. But for a lot of Nigerians, the bigger question isn't just about raising money, it's about how the money will be actually used and who ends up carrying the weight. And with the way budgets and governors work right now, many doubt how effective this move will really be. Francis Chilaka put it this way: the proposal isn't just about how much revenue the government can generate, it's really about whether the funds will be used properly.
Well, from what I have seen so far, and with this new debate, so to say, because it looks more like a proposal that the federal government wants to introduce such some kind of tax on petroleum products that's going to eat about between 700 and 900 billion annually. It's not about the yield. It's not about whether the revenue will come in, but it's about the usage of such funds. We keep talking about infrastructure. Everybody talks about infrastructure. And yet so much has been budgeted for infrastructure and we don't see it. When Mr. President said on the 29th of May 2023 that subsidy is gone, he said that the revenue that was going to accrue from subsidy is gone was going to be used for infrastructure, was going to be used for education, was going to be used for health, was going to be used for roads. Yet, we're not seeing any progress. We're not seeing anything to show for it. So why would you want to add more burden to the burden that the people are already going through? Nigerians are going through a lot right now. The price of petrol is already between 865, 890 to 1,000, depending on where you're buying from. The cost of food items is skyrocketing. Transportation is on the high. So what have they done? What has the government done with the savings from the subsidy is gone? So for me, it is not whether it is achievable or not. Yes, it is achievable, but who would pay? The same Nigerians who are groaning under poverty, groaning under hunger, groaning under lack of employment, groaning under lack of everything that government should provide for them, groaning under especially insecurity. So we need to be very cautious of what we do. This government needs to be very careful. They are really, really pushing Nigerians to the wall. They need to be very, very careful. All that our government does is just to lie to the people. And it is all these lies by government has brought about trust deficit between the government and the people. It appears that the only way government officials embezzle funds is by embarking on construction of bridges, construction of roads, maintenance of roads, maintenance of infrastructure, and all of that. But, as far as I'm concerned, I do not see any sincerity in what this government is talking about. I honestly do not see it. So it's not about whether they're going to do anything about it. It's not about whether the money is going to make any meaningful contribution to the dilapidated state of our roads. No. At the end of the day, the money will just be embezzled. And that is why Nigerians are asking for accountability with regards to the subsidy is gone, which the government said is a scam. Subsidy is gone, and yet no one is being held responsible. Yet no one has been punished for the scam that has, been in place for as many years as possible. It's really, really sad that each time the government wants to take from the people, they'll find 1,001 reasons why they want to take, but they never give back. All that the people get from government is nothing but lies upon lies upon lies.
Taking from what Francis just said, he stated that while the plan itself may be achievable, Nigerians are still grappling with the aftershock of subsidy removal and even wider insecurity. At the end of the day, it's ordinary people who will bear the cost. That's why Francis warned that the government must tread carefully. He stressed that the fear of mismanagement and embezzlement is exactly why Nigerians continue to demand greater accountability. Now, from the transport sector, a boat driver told me bluntly that his 5% surcharge will eat his daily income out. In his words, if he raises his fares to cope with the 5% surcharge, his customers will also raise the prices of the service they provide. It's a ripple effect that ends up straining everyone in the chain.
Is going to change daily income. It's going to impact negatively, not only as transporter, as driver. It's going to be like a chain reaction. In as much as a driver that comes out in the morning to meet an ends, and there is an increment in price of fuel because of the cost, it's going to reflect on the bill that he's going to give to his customer. In as much as I came out to make a profit in a day, and it happened that I'm going to pay a 5% tax on the fuel I'm going to buy, thereby causing me to pay higher on fuel. I have only but one option: to put the bill on the price that I'm going to charge on my customer, which I'm rendering the service to. And this by, if I'm increasing the price I'm going to charge on my customer, the customer have no other option than to increase the price of the goods or whatever service that he is going to render to the third party. So this will reflect even to the consumer end, because there is going to be increase in prices of goods because fuel controls almost 80% of every other thing, every other services. So if I as a driver increases the price that I'm going to charge a customer, the customer have no other option than to increase the price that he too is going to charge on the services that he too is going to render to the third party or to the consumer. So it's going to lead to increase in prices of goods and services in Nigeria.
At the end of the day, it's not really about how much the government makes, but how the money is used. Nigerians are already dealing with high costs from the subsidy removal and even insecurity. So adding this surcharge feels like an extra weight. And for drivers and small business owners, it's not just their pocket that suffers. Whatever they pass on to customers also comes back around to affect everyone else. Thank you, Olaito.
That was Olaitan Babatunde with voices from the field. This policy mirrors global practices where carbon taxes are used to cut emissions and drive a shift to cleaner energy. Sweden's carbon tax of the 1990s is often cited as a success, and Nigeria has already seen solar capacity rise in recent years as fuel costs push consumers towards alternatives, but public backlash here is loud. The Trade Union Congress has condemned the policy as economic wickedness and threatened a nationwide strike if the government goes ahead. Oil marketers want the cost will simply be passed to consumers, while civil groups argue that the flat rate tax will hit the poor the highest. Clearly, Nigerians' fuel tax debate is more than numbers. It's about trust, survival, and whether long-term promises can outweigh today's hardship. And while households and transport operators worry about the 5% surcharge, businesses aren't spared either. Their own pressure is coming from the financial sector. Nigerian businesses are facing growing financial strain as commercial loan interest soar between 29% and 33%, among the highest in recent years. The surge in lending costs has emerged as a major constraint on growth, investment, and job creation in an already fragile economy. Small, medium-sized enterprises, which make up over 80% of jobs in the country, are hardest hit. Many say they can no longer afford fresh loans and are struggling to service existing obligations. Data from the Central Bank of Nigeria earlier in 2025 showed that 3 out of every 4 businesses identify high borrowing costs as their most pressing challenge. Banking officials attribute the sharp rise to several factors, including rising pressures, elevated default risks, the higher cost of funds, and the CBN's hawkish monetary policy stance. The monetary policy rate currently stands at 27.5%, while the cash reserve ratio requires banks to hold 50% of their deposits with the CBN. This leaves banks with limited liquidity to lend, and the cost is being passed to borrowers. At a recent press briefing, CBN Governor Yemi Cardoso defended the policy, insisting that inflation control remains the apex bank's priority, even at the expense of the growth. The International Monetary Fund also backed the stance, describing it as a necessary response to Nigeria's microeconomic instability. Commercial bank staff confirmed that lending rates for most corporate clients remain above 30%, with only a few special cases attracting concessions around 29%. Government-backed facilities such as credit card loans at 24% or mortgage schemes at under 10% remain exception rather than the rule. Industry experts warn that the current credit environment is unsustainable. Dr. Muda Yusuf, former Director General of the Lagos Chamber of Commerce and Industry, described the lending rate above 30% as a death sentence for investments. He noted that most loans are short-term, between 1 and 2 years, making them unsuitable for industrial or long-term growth projects. A report by the CFG Advisory earlier this year highlighted that widening spread between deposits and lending rates, while deposits average 5 to 7%, lending rates are more than 4 times higher, allowing banks to post strong margins while leaving business starved of affordable credit. This report warned that this trend is stifling private sector growth, showing GDP expansion, and discouraging capital investment. It recommended that the CBN consider target easing pressures while governments accelerate fiscal reforms to diversify revenue and attract long-term financing. Persistently, high interest will risk undermining Nigeria's fragile economic recovery. SMEs, often described as the engine of the economy, are cutting back on borrowing and struggling to pay workers. Even large corporations are delaying capital projects or turning to offshore lenders at a more favorable rate. The longer higher rates persist, the greater the likelihood of weaker consumer spending, rising unemployment, and slower economic growth. For many businesses, the current interest rate regime is less a path to stability than a barrier to survival. From mandatory tax IDs to new 5% fuel tax and business struggling with a lending rate as high as 36%, today's stories highlight the pressures and adjustments shaping Nigeria's economy. That's it for today on Market Square. I'm Light on Adebayo. Thank you for staying with me. See you on the next one.